Okay, so support and resistance. All right. So support and resistance is one of those most important technical analysis tools. It's the fundamental part of trading, okay, of price action. Everything sort of revolves around support and resistance. So let's take a look into what it is, how we can apply it, and how to use it, okay, and how it works. So basically, let's imagine we're selling a car, okay, for $20,000. So the car's worth $20,000. All right. Now, if that car was on Facebook Marketplace, so back to the other example we used in the other video, that would stay like this, okay, on $20,000, and someone would try to sell it. All right. If it's an auction, all right, it would start at $20,000 and then continue up until someone buys it, creating this sort of trend structure. Now, if that car was bought on the Forex market, or if the car was bought on any market, right, what you see is, you'll see people, well, you see the price start at $20,000, okay, and then over the course of a month, all right, so over the course of the month, the price will fluctuate to 25 and 15K. Now, why does it do that? Why does price fluctuate? Because we got people buying and selling. So this was early people buying, okay, so increase in bid. If people had the opportunity to buy and sell, okay, buy, sell, you have this sort of formation of people buying and selling, right? So the market always moves in waves. So if the car for $20,000 was bought on the stock market or Forex market, it would start at $20,000 and it would move and create waves from 20 to 25 to 15 to 20, is, you know, in that formation. Now, if you're trying to buy the car, right, and you said to me, hey, look, so I've noticed this car has been on the market for about a month, and for some reason, it's selling for 20K, but it goes down to 15 and goes up to 25 for some reason. And I noticed that every single time it comes to 15, it bounces and goes all the way back up to 25. So it's moving between 25 and 15. Okay. Now, if you're trying to buy the car, if you really want to buy this car, it's going to be in your best interest to try to buy it when it's cheap, or when it's considered cheap. And if you can identify that this is the movement of the price, okay, and you can say, you know what, it's coming to $15,000, and the cars that, let's say the cars at 22 right now, are going to be to yourself, you know, I'm not going to buy it at 22, but I'm going to wait for it to come to 15, because at that price, it's considered to be cheap, because it always bounces off that level, and it does come down to a level. That's what I've seen before. So you wait for the price to come to 15K, and then you buy it, because that is in your interest. If you're trying to sell the car, okay, it's the opposite way. You can put it on for $20,000, but when price comes to 25K, you can be like, fuck, price at 25K, I want to sell it, because it is considered expensive, okay, because that is the highest value the price went to. So you can sell it at that level. Sell it and buy it. This is the basis of support and resistance, right? So a support level, right, is a level where we can expect buyers to enter, okay? And why do we expect buyers to enter? Because based off historical data, based on what is seen to the left of the chart, at this price, at this value, buyers are entering. And why are buyers entering? Because maybe they're considered to be cheap, or maybe they've entered before. So it's a sort of a pattern thing, okay? And the same thing for this top level is what we call resistance, okay? Resistance is a level in the market, or a price or an area in the market where sellers are seen to enter. Okay, no one's going to buy. If anyone sees this sort of 25 to 15K movement, if you're trying to buy the car and you see it, you're not going to buy it at 25K. It's not in your interest to do that. It's going to cost you too much, 10K more. So you're going to wait 15K. So at a resistance level, no one's trying to buy it, but you would sell it. Okay, you would sell it when it's most expensive, because that's in your favor. And you would buy it when it's more cheap. So we have these two levels, support and resistance. A support level is where you can see buyers enter. That's it. It's a possible level where buyers can enter. Why? Because it's considered cheap. And a resistance is a possible level where sellers can enter. That's it. It's not too complicated. Don't overthink it. But it's also not too detailed too. It's quite simple. Support is where we can expect buyers to push price up and enter. And resistance is where we can expect sellers to enter and push price down. Okay. So what does this look like on a price chart? So if I come down, all right, I'm going to show you an example, and I'm going to show you sort of how to draw it. So, you know, if I catch the bottoms of this level here, okay, I can say that, if you follow my mouse with the price is at 78.05. So I can say that at this price level, for whatever reason, price is bouncing off it because buyers are entering. Okay, and this is obviously a support level because it's at the bottom. Support, and the resistance level would be at the top. Okay. So support and resistance. Now at this level, all I can see is that buyers are entering 1, 2, 3, 4, 5, maybe 6 touches where buyers have entered. Okay. And a resistance, obviously, 1, 2, 3 touches where sellers have entered. So we have this sort of levels in the market where, the car's in the middle, the car's worth 20. This is the 25K and this is the 15K. Okay. If you ever get confused about these levels, think to yourself, if I'm trying to buy something, I want to buy when it's cheap. And that's the same analysis for Forex. We want to try to buy a currency when it's considered cheap, when it's overbought, that's in our favor. It's in our interest. Okay. This is how support and resistance works. All right. Now, what happens to a level when it gets broken? That's important too. So if this becomes a support level and this is a resistance level, okay, what happens to a price or to a level when it gets broken? Okay, so let's say price eventually broke through, okay, because we know that the price never really stays the same. It's always gradually changing. Okay, the value is always gradually changing. So once the price gets broken through, this old support level, okay, we don't throw it away, we don't delete it, we don't not look at it again. We use it and we stretch it out as a guideline, okay? Because it was once a support level, it was once an area where buyers will enter, it now acts as a new resistance level. Okay, and what I mean by that is, this was where buyers would now buy. Now that that's taken away, now that 15K, so if you're trying to buy a 15K, awesome. But if you see it go down to, 10K, you say, fuck, hang on a second. It went down even more. I'm going to try to buy it at 10K now. So this 15K becomes irrelevant, all right? But prices doesn't need to go back all the way up to this 25K. It doesn't need to, doesn't have to, because there's this new area where now, because there's no more buyers there, it leaves possible room for sellers to enter. So an old support turns into new resistance, and an old resistance turns into new support. Okay, hang on with me. All right, don't get too confused. Let me show you what it looks like on the chart. So, this is one example here. This acted like a resistance, okay, and then once it got broken through, it acted as a support. You see that? Quite simple, yeah. Maybe this is another example here. So it acts as a support, resistance. Okay. Old support becomes new resistance. Old resistance becomes new support. Okay. The price does change and the values of the car does change. It does get cheaper levels. It does get more expensive levels. You learn how to identify it. Okay. So the simplest way to sort of draw support and resistance is you want to find important key levels. Okay, so if you zoom down to a lower time frame, say 5-minute time frame, what you're going to find is you're going to find all these different levels, and yes, they could be important, but they're not strong levels. They're not those 15K, they're not the 20K levels. They're the ones in between. They're sort of intermediate levels. Okay, so when you want to try to get the most expensive and the most cheapest area, we use a 4-hour time frame, or I use a 4-hour time frame. This is a time frame I see works a lot for me for plotting support and resistance levels. Okay, because it is a powerful time frame that sort of calculates all the lower time frames and all the higher time frames, and is a very good time frame for day trading off these support and resistance levels. Okay, so you got 3 steps in drawing support and resistance levels. Step 1, jump on a 4-hour time frame and zoom out just a bit, not too much. I wouldn't zoom out like this. I'll zoom out just a bit, okay? Now from this, that's step 1. 4-hour time frame, zoom out. Step 2 is draw obvious tops and bottoms, okay? Obvious things. Whatever is obvious to you, you draw. If it's not obvious to you, then it's not going to be obvious to other people. And if it's not obvious to other people, then these aren't levels that are really going to be impactful. They're not levels that are going to move, okay? So we sort of say to ourselves, if it's not obvious to you, don't draw it. Don't overthink it. Just think tops and bottoms, or whatever you feel works good, draw, okay? and then don't cloud it too. Don't do too much, because there's not too much. If there is too much and you're overthinking it, you're trying to catch those intermediate levels, okay? We're trying to catch the big ones, those big levels, right? Now, that's step 2. Step 3 is we want to zoom in and we want to adjust the levels to get the most touches, okay? And what I mean by that is, right here we get 1, 2, maybe 3 touches of this level, okay? Now if I drag this down here and I bring this up a bit, and I'll bring it down a bit, we get 1 touch, 2, 3, 4, 5, 6, 7 touches. So we went from getting 3 to getting 7. Okay, so if this one was down here, that's getting 1, 2 touches. If I bring it up like this, it's getting 1, 2, 3, 4, 5, 6, 7 touches again. Okay, so you want to make sure that you're adjusting it to get the most touches. And you don't have to go like that. You don't have to go drastic, but just quickly, work it out. All right, how can I make this level more stronger? And that's by getting more touches. So there's 2 very important things, all right? With the support and resistance levels, the more touches they get, the more powerful they are, the stronger they are as a level, okay? And also, if they act as a support and a resistance, that makes them even more powerful. So your strongest levels will have the most touches and will act as a support and a resistance. So this level right here is an area in the market that is very, very impactful, that when price comes to this level, a decision whether to buy or sell is made, okay? And if you want to make money in Forex, you need to buy or sell, okay? Now, making a decision revolves around waiting for price to come to these key levels and trying to catch a buy or a sell, okay? So 3 steps. Step 1, 4-hour time frame, zoom out. Step 2, plot obvious key levels. And step 3, adjust the levels to get the most touches, okay? Support and resistance is the basis of all price action or fundamental trading, all right? It is super important to learn, and everything you learn after this sort of adds on to it. Like it sort of just makes it more powerful, makes it more, adds more confluence to it, adds more reason why to take a trade. But it also surrounds support and resistance levels, all right? So I hope you guys learned that. I don't overthink it. If you're trying to just think top and bottom, okay? Don't try to catch in the middle, because those are intermediate ones. They're not really going to make the most impact. As long as you're on a 4-hour time frame, plotting obvious ones for you. It doesn't have to be a lot of them. I've only got 3 on my chart. You'll be fine, okay? So that's support and resistance.